Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Welcome traders, and welcome to another live trading session at Tradin TV. Today is a special guest that we were warming up for a whole week, and from now onwards he will be with us every single Friday. Meet JadeCap, a trader who doesn't just pass challenges, he rewrites the standards of consistency. JadeCap has years of experience in both Forex and futures, and he has been in the industry for some time too. He has reached the new standards with his number of payouts, or a one big payout that he had received. Was it, Kyle, 1 million in a month?
About 1 million a month, like 2.5 million over the course of 3 months.
There we are. So he is inspiring, but he's not just inspiring. He's raw and truthful, and he's going to show you the real thinking process of a trader who had received 2.5 million over 3 months. So you will be able to learn from him, from his mindset, from how he approaches the markets, how he views them, analyze them, and how he makes decisions. JadeCap will be here from today and then every Friday after, hosting and trading during New York live trading session. High performance execution, and I am really looking forward, JadeCap, to this live trading session. I know it's a difficult one. We have NFP today, but even if we just hear about your thinking process, that is good enough. So guys, enjoy it. JadeCap, the stage is yours, and traders, have a wonderful New York live trading session.
All right, thanks, Paulina.
Bye.
All right, so guys, let me just make sure my screen is sharing. Let's see. All right, perfect. Can everybody see my screen? Just type a 1 in the chat. So, the first thing that I'm going to talk about, right, is obviously NFP today, and it's the first day of the month. So, I know it's going to be, maybe a little bit boring today, but today's not really a day where I'm trying to put on risk. Okay, so instead, what I'm going to talk about is how we approach the markets, especially with such a volatile week this week. So, if we just take a look at our calendar, right, we had a lot going on this week. We had FOMC Fed funds rate, and then we had NFP lining up with the end of the month as well. So if we just take a look at our monthly charts, right, that's what I'm going to cover right now. We're going to cover our monthly timeframes and go over, what I'm actually seeing in the markets currently. So obviously, all these index markets are at all-time highs or very close to all-time highs. We've ran above this long-term high here. Same with NQ. I think YM is a little bit weaker compared to those because we're not trading at all-time highs. And then if we look at the dollar, right, we got a very large bullish engulfing candle after we've taken out a lot of sell-side liquidity. So we've taken out major levels of liquidity. And I've talked about this consolidation at length. This is our classic AMD pattern where we have this holding pattern essentially, which spanned the course of 2 years, guys. So this consolidation was 2 years long. This here is our manipulation outside of the range, and then we get this nice distribution lower. Now that we're at a discount though, right, we've taken out this sell side liquidity and we've gotten a closure back above that swing low. I could possibly see the dollar correcting a little bit more higher. So just basing that on this specific dealing range, right? We may trade all the way up here, guys. So we may get a pretty deep correction on the dollar, if we continue seeing follow through. So that's the dollar index, right? Our monthly charts on ES, right? We have to be very cautious of continuing to try to go long on these markets. We do have bullish fair value gaps that are below us. So I really wouldn't be interested in sizing heavily long unless we get a run below this old monthly low, which we possibly could get this month. Just keep in mind that we are still in the summer months. So it is still not, in my opinion, the best conditions to be trading in. And I don't want you guys to look, I talked about this at length with my group. I don't want you guys to look at summer months and say, have recency bias, because last summer was kind of an anomaly for me. I've been trading for a very long time, and for the majority of those summer months, they are typically slow. So if you're expecting large moves during the summertime, historically, that is just not, that's not been the case. So I don't want you guys to look at summer months and look at last summer and say, last summer was really great. Let's, expect the same thing this summer. You have to approach the markets in a manner that makes sense, right? And long term, I think if you're consistently trying to trade during the summertime and aim for those very large swing positions, that you're just not going to be able to find opportunities like that all the time. Especially after we've gotten some extreme volatility the past 6 months. Okay, so Q1, we got this massive run on all this sell side liquidity. So we have all these lows that were taken out, right? I believe on NQ, we had some equal lows down in here that we took out. And then after we got this month, it was pretty much easy, in my opinion, much more easy to read long positions after we get this nice flush, because not only are we trading at a discount, right? We've taken out sell side liquidity, and there's more room to run higher to all-time highs. But now that we're pushing up against those all-time highs, we have to be much more mindful of how much further this market can go. So if you're trying to, over leverage and oversize, expecting that the market's just going to continue higher, I think you're putting yourself at risk of possibly going into those drawdown periods. Now, we do have NFP coming out in 22 minutes. Again, it's the first day of the month. I know so many traders that, and I'm speaking from personal experience, if you guys are in that same position, how many of you guys come into the new month thinking that you're going to crush this month, and then the first couple days you go into a deep drawdown, and now all of a sudden the rest of the month you don't have any capital left to trade with, and then you're missing the real moves. All right, and that's typically what I'm waiting for currently. All right, so let's go over the weekly time frames. NASDAQ, we are starting to slowly create a bearish engulfing candle on a weekly time frame. So I'm very mindful of where we are currently. And I would probably, if this weekly candle closes where we are right now in the next 9 hours, we don't know if it's going to close as a bearish candle. And that's one thing that I had to learn over time was you cannot trust candles until they close, because in the next 9 hours, this thing could flip bullish. And then all of a sudden, my bearish idea gets thrown out the window. So again, all price action is all fractal. We're looking for closures. Closures tell us the actual story, because how many of you guys can respond in the chat. How many of you guys have entered a trade where it looks extremely bearish or bullish, and then by the end of that candle, let's say you're trading a 1 hour time frame, all of a sudden that candle flips and it's going the opposite direction. Okay, so when I'm trading, let's say if I was trading a very low time frame, just because the candle is bullish right now does not mean it's going to close bullish. There's still 49 minutes left in this candle. We still have NFP coming out in 21 minutes or 20 minutes. And, we need to pay attention to all the levels that we're looking at right now. When I come to the markets right now and I sit down ahead of NFP, I see that currencies are pretty much flat. I mean, there is a bit of desyncing here. So what I like to see is the dollar actually moving, because I trade mostly dollar denominated pairs, so all the majors. If the dollar is basically flat, and then I see New Zealand dollar, pound dollar down a fair amount, but then I see euro, CAD, they're not really going anywhere. That is not really the time for me to trade. What I'm looking for is the dollar to be up or down a fair amount, and I have a good expectation of where the market's going to go, and I like to see all these pairs kind of in sync. So with New Zealand dollar down 0.5%, I would expect euro dollar to be down, 0.25%. Same thing with the pound. So I want all these things to be in alignment. And then when I sit down and look at the index markets, we're already down 1%. If I was to expect that this market is going to continue trading lower, I'm selling it when the daily range may already be capped. We may already have hit this point as our daily low. So I'm not positioning ahead of NFP. I'm taking it easy. It is the first day of the month, which I do not like trading. I don't like trading the first day of the month. But euro, we've already taken out the previous monthly low. I think there is still room to run lower. We'll see. The pound's already taken out its monthly low, but last month closed as a bearish engulfing candle. We've taken out this buy side liquidity. So in my opinion, this market does have room to run lower as well. And how much further can it run lower? Well, let's draw out our fib here. It could go down to 50% or even lower. All right. But currently, we are so close to this swing low here that the risk reward to me is just not there currently. Right. Guy Nenjer is asking it. I'm in a dollar yen sell, 10 lots, looking for a TP of 149. In my opinion, I do not like positioning ahead of NFP like this because it could go either way, right? I try to take it easy, and it's very important to pay attention to the calendar. It's very important to pay attention to the time of day, day of week. All of those things make a difference. What I was expecting of the dollar did not happen this week. I was expecting the high of the week to be printed somewhere in here, Wednesday, after FOMC. I wanted to see this level be inverted, right? Because we took out buy side liquidity. The buy side liquidity that I was looking at were all these equal highs in here. So if I just draw this out, and my group knew about this ahead of time, this level here, right? We have all these highs in here that the market has gone and traded to. But now that it's very overextended, in my opinion, again, I'm not trying to predict when the dollar is going to turn around and maybe make that correction lower. I'm just waiting. So again, when I am trying to position myself, I do not want to be the first person into the trade, and I also don't want to be the last person into a trade. So what does that mean? If I'm bullish, and I'm just drawing out both examples, I would be the last one into the trade. All right. And if I'm bearish, I would be the first one into a trade. And that's not what I'm trying to do. Okay. I'm waiting for the market to tell me when it's going to roll over. And I'm not going to get that until maybe we see some daily bearish candles forming, until we see market structure shifting, which we don't have yet. Right. These are all very important things because, again, I'm not trying to be the first person into a trade. Now, when the market is displacing, I'm just trying to catch the meat of that next leg. So we'll see exactly where we head in the next 15 minutes. Now, typically on NFP doesn't always fall on the first day of the month. It's just the first week of the month. Sometimes it's the 5th, the 6th. Maybe it's even past that, right? Depending on how that month forms or how the calendar lands. And if NFP is on, like, say, the 5th or the 6th, I'm much more inclined to try and trade afterwards. But the first day of the month is definitely not when I'm trying to participate. I want to wait for the monthly candle to start panning out and get some real direction before I just all of a sudden try and position myself, right? So based on this is like the checklist that I have. This is not really the time to position myself in either direction, right? Because if I were to go long right now, I'm going long way above the weekly open. And if I'm going short, I don't even have a market structure shift, right? I need displacement. I need a market structure shift because right now, all we're doing is creating higher highs, higher lows. So this market is creating higher highs, higher lows. We don't have bullish fair value gaps being taken out. We don't have lower highs, lower lows. We don't have bearish fair value gaps. So right now, we're just waiting. Am I still trading 20 Apex accounts? No, I got banned. They banned me. Yeah, I think if you're going full margin, you might end up as liquidity. Now, again, you guys will never hear me say you guys should be trading certain levels of risk. It's all personal preference. Everybody always asks me, how much risk should I be taking on my accounts? This is all very personal. When I'm trading funded accounts, again, I don't care about the evaluation fee because I'm in a position where I'm trying to get funded as fast as possible because all that wasted time. Let's say if I take 3 months to get funded on a 100K account. All of that time, that entire time, 3 months has gone by. I'm never in a position to make money. So, again, you have to ask yourself where you are financially, if you can afford to take those levels of risk, right? And then determine, how do I want to approach these funded accounts, or how do I want to approach my personal account? When I was first starting out, I was more focused on protecting the accounts that I had. Okay. So I started using this tool here, Market Edge, just for my fundamentals. There is a free one that you can use. It's called Financial Source. Or sorry, Financial Juice. But I think there's maybe too much information to dissect here. It's not very easy to dissect and understand why, or all these different headlines. So they do have a Squawk, but I don't really use Squawk. I think this dashboard is pretty clean. So right now, got a pretty routine. I don't even know if you guys can't see it. We have Trump kind of just doing what he's going to do. The Fed held rates steady, which is, why. When the hard part about trading right now, and you guys can agree with me or not, recently, the market, even though there are moves, it's been more so intraday. I think the better moves were earlier this year, where markets can be very easily one-sided day to day. Whereas a lot of this, outside of a couple days, we have very small ranges, right? So we have very, very small ranges. So unless you're an intraday trader, it's been pretty difficult to try and catch outsized moves. Outside of like these couple days here, right? We don't have large continuous trends, right? We have one day, up day followed by down day, up day followed by down day, or followed by 2 down days. So it's been more of a intraday traders market. Currencies, however, have been moving quite nicely, which is why I have a different approach to markets. I like having this watch list, right? You guys can see that my watch list is pretty extensive. Again, I'm not trading all of these things. It just gives me an overview of how markets are moving. But based on yesterday's daily close, I think this market can still go lower. It's just I've already missed out on a lot of the risk reward opportunity to position myself short. That's not to say that you can't find a decent risk reward to go lower. I just personally would rather see deeper retracements. So I think as long as we respect this bearish fair value gap, the market should continue lower. But again, it's NFP, and I'm not trying to stay in front of that train. How do I identify breaks of structure? I don't even know what Chach is. I think it's a change in order something. I don't know. Change in characteristic or something. A break in structure for me is when I am bullish, right? I want to see closures below swing points. That to me is a break in structure. When we just have very shallow runs, those are just liquidity raids before a retracement and then going lower. So if I were to look at all of this price action here, I need to see a closure below the low. Right? So this is a closure below the low. This ends up being a retracement. You have to be able to withstand this retracement. Maybe you are trying to continually position yourself short after this break in market structure. Right? Well, then once you get on board, you have to find those opportunities where the market is retracing to premium levels, right? And then we get another market structure shift here that is confirming that the market is still bearish. You have a bearish fair value gap here, right? And then these are just retracements to premiums. So if we draw out this range from here to here, right, it's continually retracing to premium levels. But I do look for closures below swing points. So up here, we didn't get a closure until all the way down here. This is our break in market structure. Because as you guys can see, we get an actual closure below the low. This is not a break in market structure for me. Now, again, I got banned. I got banned at Apex. They offered me to go, they asked if I wanted to go live or if I wanted to take the payout. 100% of you guys would take the payout. How to handle yourself during a drawdown, like 4% on a challenge? Well, how much more drawdown do you have? How much more drawdown do you have before you blow the account out? And again, this is very personal. You have to ask yourself, can I afford to just blow the account and reset? Or do I want to prove to myself that I can actually have the skill set to get out of a drawdown? They're two different. There's two different goals that you're trying to hit, or two different ways to approach that. Am I trying to get better at managing the drawdown, or am I trying to get funded and get paid out? And can I afford to lose the account and reset? So you have 6% left. And I always bring this up because you have to figure out like how many trades you can lose in a row before you want to blow the account. Because if you have 6% left, there's a myriad of ways that you can manage that. Right? If you are typically if you're typically hitting like a 50% win rate, you can get out of that drawdown pretty quickly if you're risking 1%. But if that's not your goal, and your goal is to keep the account because you can't afford to pay for another eval, then size down and take your time with it. It's not black and white. Just trading for me is not black and white like that. Trading with sub is asking how many trades do I take in a day? It depends. I typically tend to never go over more than 2 trades in a day. And if I take that second trade, typically it's on less size. So typically no more than 2 trades in a day. Just because when you're trading a lot, you also have to journal a lot, right? And how many of you guys are in that cycle of taking X amount of trades a day, and then you're not journaling at the end of the day because it's too much work? How long does it take you to journal 5 trades compared to 1 trade or 2 trades? I spent so long over trading that I just didn't have the energy at the end of the day to journal. Yeah, so YM, it's the weaker asset compared to ES or NQ. But again, it's the last day of the week and it's the first day of the month. How much more are we expecting out of this weekly candle? The weekly expansion has already occurred, for me at least. And then next week, I'm trying to position myself based on the closure of this week. Right, so let's say if we get a very large bearish engulfing candle, what I'm expecting for next week, right, is, let me turn off this magnet, is something like this. Some type of retracement into Monday, Tuesday, or Wednesday, where I could possibly position myself short to then go lower. Now, that might still end up in losses, because if you guys look at this candle here, right, this weekly candle closed very bearish. The next weekly candle, we took out the weekly low, traded higher. If you were to position yourself short, the next week is taking you out still. But that doesn't mean that your trade is wrong. It just means that the timing is wrong. And that's where risk management really comes into play. How many losses can I take before I catch these weeks, right? If you blow your account on this one weekly candle, and then you can't take advantage of this week, right? This week here, when the market is really pushing lower, and the risk reward is skewed heavily in your favor, you're not trading properly, and you're not respecting the risk of the markets that you can take losses, right? DYDX, isn't DYDX? DYDX is it's like another index of dollar index, isn't it? I just look at the Dixie. So what we're looking at right now is this run on sell side liquidity. If this weekly candle closes like this, now we have a bullish order block here, which maybe we're going to get that retracement, which is what I would want to see. If I'm going to position myself long on the dollar, I'm not trying to position myself like this, right? Where at least on the weekly time frame, there's no real place where I can position myself and have a logical stop loss. Because my stop loss needs to go below at least a candle low, or at least a swing low. If I have to put my stop loss all the way down here, right, it's not giving me a lot as far as risk toward. It's not, that's not a favorable trade. So again, I'm not trying to be the last person into a move, and I'm not trying to be the first. You guys are asking a lot of questions that can be, that can be figured out by following my channel. There's plenty of other channels out there that trade a very similar strategy to what I do. I look for raids on liquidity, whether that's Asian session or daily lows, something like that. Power of 3, right? And then position myself properly. Because this is all fractal. Right? If you wanted to go long, this run on the Asian low, it looks just like yesterday, right? But we have NFP coming out in 50 seconds. What is Tradin? Tradin is the streaming platform for funding pips and funding ticks. Gold will go down. You guys, that's a very bold claim. Very bold. Because right now, gold is just in a consolidation. And gold could be in an extended period of consolidation. Just like I showed you guys with the dollar, we were in a consolidation for 2 years. Gold could do something like that, just like that. Yeah, I use the same concepts across any market. All these markets move the same, guys. Right, so if I hid the symbol up here, you would not know what market I'm trading. Right? All these markets look the same. So again, the fact that we were so far away from the weekly open and there was a lot of buy side liquidity above us. Again, I'm not trying to chase shorts. And it's a little too early for me to go long. And see, this is what I don't like to see too. on NFP, this candle doesn't have a wick. But, you know, don't say I didn't tell you guys that I wasn't trying to be the first one into a trade, right? Because the way that I look at trading is that there's always going to be opportunity. It doesn't matter if I miss a day, right? Let's say if this day closes bearish. Now, all of a sudden, we have a possible lower high, right? Because if I just look at all this market structure here, we have lower high, lower high. We have this buy side liquidity being ran out. If this is going to print a lower high and continue trading lower, there's still plenty of time for me to get short. Yeah, the daily SIBI is hit, but are you trying to go short inside of this right now? Especially after a candle that looks like this. Why is everything dropping like this? It's NFP. NFP for me is a coin toss. And I think if you're trying, this is where, you know, the professional traders separate themselves from amateur traders. Is that we're not trading based on our feelings or opinions of the market. We're trading based on what the data is telling us in the charts. How do I approach weeks with few high impact news events? I actually like weeks that have very little high impact news events because the price action is slower, but I think there's less manipulation. Where can I get those pictures on your wall in the back? I can't remember what it's called. They're like, oh, a displate. They probably don't even have any anymore. They make like magnetic posters. Pretty cool. How can I apply to be in your private Discord? I'm not gonna promote my services on this channel. I'm streaming for funding ticks and funded pips. And I'm just trying to teach you guys how to operate properly. How do you approach the markets? How do you how do you manage risk when it's appropriate? And how do you avoid taking unnecessary risk? I think that's a topic that not a lot of people talk about. Is how do you sit still when everybody else is trying to gamble or they're trying to get married to a bias and make decisions based on their feeling and not what the charts are telling them, right? Right, somebody was mentioning gold's going lower. We're just in a range right now, guys. This is what the data is telling us. The data is not, the data it doesn't lie, okay? So instead of, kind of tunnel visioning on what you want the market to do, look at what the market is actually doing. We need to look at what the market is actually doing. And right now, the fact that we are still in a range and we haven't gotten a breakout, we should not be anticipating the breakout. Yeah, of course. We can analyze Dixie on a quarterly chart. Of course. I love doing analysis on the quarterly, right? There's still 2 months to go. What do we see on the quarterly chart, guys? I want some people to, make some comments about what we think the dollar is, or what we see the dollar is doing right now. What do you guys see on the dollar? Nesh is saying consolidation. Bearish breaker. Okay. Broke the previous swing low. Taking sell side to go up. I'm not quite in agreement with that, but let's look at what we have currently. We have this run on buy side liquidity, right? And I already talked about the consolidation here. We have this consolidation. We have manipulation outside of that range. Then we have a market structure shift. This is our market structure shift, right? We get a closure below the low. Not only that, but I'm looking at this down close candle as being a breaker, which somebody mentioned. This down close candle is a breaker. And again, look at the time that's left on this candle. 2 months. You guys don't think that this candle can flip bearish? Because it can. I'm not bullish on the dollar because of what this is telling me. We failed to continue higher. We're not getting displacement above that swing high. In fact, we're getting the opposite. We're getting displacement lower. And all of this, you know, if we think about the cycles of market, right? We have consolidation, markup, markdown. This here, in my opinion, is markdown. But what happens after markdown? Might get a consolidation or retracement before another markdown. So after this, we could expect that the market maybe is going to go through a consolidation period for months, right? For multiple quarters, but I'm still bearish. Because in order for me to turn bullish, what do we need to see? We need to see swing highs being broken. We don't have that. We have a swing low being broken. We need to see displacement to the upside. So just for the fact that we took out sell side liquidity does not automatically mean go long. $12 months is inside of a fair value gap. Yeah, to me, that doesn't really matter. There's still 5 months to go. That doesn't mean that this fair value gap is going to be respected and then go higher. Right? If this closes a bearish engulfing candle, I can see dollar continuing lower. Because just zoom out. Is the market creating higher highs or lower highs? Not only that, but this is low resistance liquidity. So, you know, overall, I'm still bearish on the dollar. This is actually a monthly breaker here. So maybe we're just retracing to the monthly breaker for continuation lower. Yeah, it's very, very long term. That doesn't mean that you don't. That doesn't mean that you can't take trades in the opposite direction. They just are. They're. They just don't last as long, and I prefer to trade with the high time frame trend. But now that this hourly candle's so large, it's like if I go short right now, where does my stop have to go? Right? If this hourly prints like this, maybe we're not going to see that retracement until next week. All right, so look at these days here on the vertical or on the horizontal axis. You know, maybe we're going to get that retracement up in here because let's say if this prints here and then we get another hourly candle that's maybe small because we got this large expansion. we're going to have a very large hourly fair value gap. If the market's mostly down over the course of 3 months, I tend to not try and go the opposite direction. Or if I'm expecting the markets to continue to trade higher, I try not to trade against that idea. Like when I have a pretty strong idea of where the market's going on the high time frame, I'm probably 90-10 going in the same direction. So what I'm looking for on the daily time frame, right? Just for the fact that this isn't a daily SIBI does not mean that I'm trying to go short here, because this daily SIBI is showing up in a discount of the range. So if I drew out this range right now, the SIBI is in a discount area. So what I'm actually expecting, if I want to be bullish on the euro and bearish on the dollar, which I am, I want to see this fair value gap get inverted. So if you invert this level, you guys will, I'm not going to be streaming live all next week because I do that privately. But if you're tuned in right now, just know if we get a closure like this on the daily time frame, this is what I'm going to be looking for next week if we invert this. So what I'm going to look for is this level to get inverted. We get a nice strong closure. Maybe Monday prints as a down day. Tuesday maybe prints as a down day. And then I can position myself long next week to run higher. Maybe into this fair value gap or even higher. Right? Because we have this low resistance liquidity above us. Now this is where you're gonna, you're gonna have to do your homework on swing lows, liquidity raids, and how you actually should trade a liquidity raid. Yes, you can trade it as soon as it goes below the low, but again, you don't know how much further lower it's going to go before you get that response. This is the response I was looking for. Well, I'm not positioning myself yet because there's plenty of time for me to get long if the market's going to keep going higher. A closure back above the low means this is a swing failure. But I need to see a closure. Bias on NQ. Pretty flat right now. We'll kind of see where this monthly candle goes. Because if this market is going to keep going higher, right? If we just look at last month, what did it do? It created a higher high and higher low. This market is still bullish compared to this previous month. We have this low here. Whoops. And then this low here. So overall, this market is still bullish. Why can't I post trade breakdown videos? I've posted tons of trade breakdown videos. During that whole Apex run, I've posted trade breakdown videos. All these trades are all the same. It's just about doing the reps on your own. Because I've traded these liquidity raids thousands of times, and I know what to wait for. So like here, same thing here. This is a liquidity raid. But when you wait for the close, you get a nice retracement here into this order block, and then it continues going higher for a very long time. So after the liquidity raid, right, we get a bullish engulfing candle here. And then all of these days, even if you get down days, it's just more opportunity to try and position yourself long. Right, but I'm avoiding any of these down days. So based on just like probability and risk reward, maybe you're losing on 50% of these days. But it's the days where the market's running for multiple days in a row higher. That's where you're making your money. Sideways on 3-month chart, like New Zealand dollar, you're basically trading in a range. So maybe it's going to go to these range highs. That's how I would anticipate it. Because we did run below this sell side liquidity, and we got a closure on the 3-month time frame. So I'm just seeing this as a retracement to the monthly, on the on the quarterly. All right, so we got a very large bullish engulfing candle. Maybe this is just a retracement towards this previous quarterly high. So what I'm looking at is maybe this is a quarterly power of 3. So if I'm expecting bullishness right now, you know, again, I'm not a quarterly time frame trader. There are traders that do trade the quarterly time frame. Right now, you'd be buying it at a discount because this quarter is down currently. But let's say if we get a nice bullish daily candle, there's still plenty of time to find intraday setups and swing setups going higher, right? Because this is the liquidity raid, just like on Euro, that I'm looking for. I mostly execute on either the 1 hour, the 15-minute, or the 5-minute. But all those ideas have to line up with my higher time frame. Right now, if we look at this, you know, I can't go long on this unless I get a really deep retracement because my stop would be way all the way down here. Now, if I wanted to gamble, I would have done exactly what I told you guys, was lean short on the dollar and long on these foreign currencies, right? So this liquidity rate, it's the same thing that I'm looking for, right? This is a 15-minute time frame, guys. It's the same exact thing. This is a swing low, right? So pre-market swing low. This is a nice closure above that swing low. You go long and put your stop loss below the low that took out the previous swing low. And right now, it would have been up to 6R. But I don't look at it like, oh, I missed the trade. Because these setups are going to appear all the time. They appear all the time, guys. I don't really care about missing a trade. No, I'm not planning a trade. I'm just walking you guys through the process of how I operate around the markets. And I'll be honest with you guys. You guys are going to learn a lot more by trading on your own rather than taking trades from somebody else streaming. Right? Because you're the one doing the decision making. You're the one doing the analysis. You're the one doing the trade management and the risk management. So if you're doing it all properly and journaling it all properly, you're going to learn a lot more than following my trade idea and not knowing why I took the trade, or not knowing why I'm moving my stop loss, or not knowing why I'm doing certain things in the market, right? A wick, not a close. No, I'm just looking for the rejection. It can close and still reject. Like it can close and then the next candle rejects. That's why I wait until I get a strong closure back above a specific low. I wonder if I can find a example right here. Let's say if you're looking at this swing low and not this one down here. If you're looking at this swing low, right, it still closed below the low, but then we get this very strong rejection. That's when you're looking for long setups after that. Oh, one level I didn't talk about was this gap. So you guys can see here that we have a closure here and then an open here on the daily time frame. This is a gap. You guys can see how we retested that and then rejected strongly. And if we get a strong rejection like this, I am not trying to go long on the dollar because the market is not agreeing. It's not in agreement with that. But I have plenty of time to get short. Let's say if this weekly candle closes with a very long wick to the upside. All it's doing is creating a lower high. Right? If I remove all this, what is all this price action? Of highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower high maybe? So if this is a lower high, there's plenty of time to get short. My hold times vary. Sometimes I'm trading an intraday model, sometimes I'm trading a swing model. You have to understand the execution time frame that you're taking and how long it might take for that trade to pan out. So for example, what I did in the past was I would plan out a daily trade. So let's say if I planned out a daily setup and I went short based on this engulfing candle. Let's just say that the next candle prints, it goes higher. Let me remove all this just because I don't want to confuse you guys with too much information. Let's say this daily candle prints as an engulfing candle, and then the next candle prints higher, and that's where I go short. So this is really where I want to short on a retracement. So if it retraces and I go short, what I would do previously is I would go short, put my stop here, and let's say my target is all the way down here. I found myself going to these lower time frames and looking at the low time frame price action, when that's not really what you should be doing because you didn't plan the trade on the low time frame. A lot of you guys are asking the same questions and I keep answering them. No, I'm not planning a trade right now. I'm just talking in, I guess I'm just talking to show you guys how I would manage myself if I'm planning a trade. Maybe you guys are showing up late, but I already told you guys my bias on the dollar. We already talked about all this, right? We have a monthly bearish breaker. Nothing in here is telling us that we're bullish yet, right? We don't have a swing high being broken. We don't have displacement to the upside. We don't have any of those things. We don't have a bullish fair value gap. So if you think the dollar is going to go higher, the data in the chart is not in agreement with that. Yeah, I will make live executions, just not today, guys. It's the first day of the month. And again, this is where traders, they don't have the patience to wait any of this price action out. They're gambling ahead of NFP. You're trading when you shouldn't be trading. And you're trading like you're addicted. Right? And it's the hard truth of trading. Is that you guys don't know when to sit still and you don't know when to be active. And those are the times where you get burned, and now all of a sudden you don't have the energy or the mental capital to trade when you should be trading. And it's more of a discipline thing. If you look at the calendar and say, there's too much going on this week. We have Fed funds rate, we have end of the month, we have NFP on Friday. If you can't look at this calendar and force yourself not to trade, I don't even care if good setups show up. If you come to the charts at the beginning of the week and say, I'm not going to take any trades, and then you find yourself in trades, you just don't have any discipline. You don't have any discipline to follow the plan, right? And right now, I'm following my plan that I set out on Sunday, right? You guys weren't with me on Sunday. I already talked about this at length with my group. This is my plan coming into the week. Just the fact that we have all this going on, the market wasn't doing what I was expecting it to, right? This is the move that I was looking for on Wednesday, to be honest. Because we're so far away from the weekly open. At some point, that weekly high is going to be printed. How am I now? Yes, I'm very happy. And I'm happy that I don't have to trade. I do not have to place any trades, guys. Because you have to understand that if you're trying to position yourself right now, that's a level of FOMO. Right? It's a level of FOMO that you guys just can't sit still with. But I'm looking for market conditions where I can sit still and find a good level where my stop loss makes sense. Not when these markets are in a crazy range, because we didn't even get the confirmation to go short ahead of the news. This thing just printed the news and it just tanked, right? Where's the market structure shift lower? Where's the bearish fair value gap that would have made me go short? Because I can tell you just from experience that there was just as much likelihood that this thing could have ripped higher I think it's not only the most dangerous day, but it's probably one of the it's most dangerous day of the week, but it may be the most dangerous day of the month because it's the first day of the month and it's NFP. After the Fed resigns, that's a major if, right? And then as professional traders, we don't operate on ifs. What if the market does this? Or I'm expecting the market to do this. I want the market to tell me. I want it to show me what it's going to do and where I can actually properly position myself. I'm looking at two different chats. For some reason, the Kick chat does not show up on Restream. But I'm live on Kick too, guys. Let me just try and catch up on, see if anything is worth reading. So, Oh My Todd's asking, I know news varies from month to month, but what do you believe is the optimal range of trades to take per month on average? It's all personal. Are you an intraday trader? Are you a swing trader? Swing traders are probably okay taking 2 to 4 trades a month. But that's because they're holding trades, maybe at larger percentage risk, right? Maybe they're taking a 2% risk on their swing trade across 3 different positions. So they have 6% open exposure. But those trades take a very long time to pan out. Maybe they take days, maybe they take weeks. If you're an intraday trader, 2 to 4 trades, maybe even more, 6 to 8 trades a week. But I guess here's the thing, is most amateur traders want to trade intraday without having a real edge. So you guys are exposing yourself to more risk because you're taking more trades and you're taking it at the same risk that the swing traders are taking it. But the swing traders are not blowing their accounts as fast, right? They have more time to make decisions. And I think that's a very hard lesson that I had to learn was I needed to just slow down. I don't need to overtrade and I don't need to put myself in crazy positions because these markets are always moving. How did I learn to accept losing trades and streaks? Yeah, experience. Yes, experience. And getting comfortable with the probabilities. It takes a long time. It takes a very long time to get comfortable with losses. And even now, I would say I'm not comfortable with losses. I just know how to manage them. Because it's still frustrating when you take a loss. It is still very frustrating when you take a loss. Yeah, I do change my TP based on the conditions. If I have a very strong indication of where the market is going to go, my TP does change. Like if we get a very strong response, let's say if I was positioning myself down here, trying to go long on the dollar, which I missed. I miss trades all the time. But I did talk about this level of liquidity at length in my group. Let's say if you went long inside of this bullish fair value gap, and then let's say we get a very strong response like this, but your target was only here. I'll extend that TP to the level where I think has a very strong odd of going to. All right, so let's say if I plan my trade here, let's say I went long on this candle, put my stop loss here, because I don't always get in right on the fair value gap. But if I see a strong response, I'll get in afterwards, put my stop where that fair value gap was. And let's say I planned my trade here and it was only a 2.3 to 5. But all of a sudden, this next daily candle just rips and it's very close to my TP. If I extend it to where I think it's going to go, I get another 0.6R out of that trade. Right? It's very discretionary. If it's moving very slowly, I tend not to adjust my TPs. The minimum time frame I go to is probably 5 minutes. Because I need time to make good decisions. Every 5 minutes is probably good enough. But even for me, guys, if you're an inexperienced trader, I very highly doubt that you're making proper decisions every 5 minutes. So this current price action also doesn't make sense to me because with the dollar dropping lower, I would expect index markets to be pushing higher, right? Because that to me is more of a risk on scenario. But maybe we want to take out more of this buy side liquidity because there's a lot built up here, right? Because it's very slowly moving to the upside. Maybe we want to take out some of that liquidity and maybe trade it into that monthly fair value gap that I talked about before going long. All right, so we have this monthly fair value gap. Maybe we take out that monthly low and then position ourselves long. Yeah, exactly, Zelino. It's enough to take one heart attack an hour. And it's not even a heart attack. It's just managing the risk around the trade. Because I hate getting stopped out in 5 minutes and then seeing the trade pan out in my favor. Man, you guys are spamming the chat like crazy. Someone was asking if a gap has been mitigated other than a strong closure over it, what are other ways it can be considered as invalid? I think if it's consistently trading to the gap, then it becomes less and less important to me. So we have this gap here, right, on the dollar index that I talked about. Make it orange. We have this closure here and then the open here. If this market kept trading to it and it just kept bouncing around like this, that's when I avoid the gap. I don't really care about the gap anymore. But a strong response from the gap, like we're seeing right now, that to me is a very strong indication. But again, once we get these lower highs being printed, there's plenty of time to go short. Just like up here, guys. If you guys were looking at this fair value gap here on this retest, there's no FOMO here. If you just sacrifice giving up this day to actually give you confirmation that the market is going to go lower, look at all the other days where you can possibly position yourself short. You know, maybe you're taking a loss or 2 losses on these days because it's not really doing what you want it to do. And let's say we waited for this swing high here and then we got a nice closure. Look at all these days where you can make it back up. Let's say if you have 2 or 3 losing trades, you might have 4 or 5 winning trades with large risk to reward in your favor that make up for all these losses in here. And that's proper trading. You have to understand that you're going to go through streaks where you have the right analysis, but the execution is just off. All right, please guys type a 1 in the chat if that's you. Right? If you have proper analysis and then you get chopped up because you're so short-term minded that you can't see your trade through because you don't have the patience to see multiple days going against you and then multiple days going in your favor, and now all of a sudden you're shaken because your emotions are thrown off, you're in a drawdown, right? And you can't stomach these losses, so you abandon the idea, and then you think that the market's going to go long. So you start positioning yourself long, right, to think that the market's going to go higher, and then you miss out on the actual move. That's me. I know it is, guys, because that's exactly what happened to me. You guys are spamming the chat like crazy. I feel like I've answered questions and you guys keep asking them. Yes, I cut my risk in the summer months too. And again, I don't look at last summer as saying, you know, last summer was very volatile. There was a lot of movement last summer. Historically, it's not always been like that. Sometimes it's hard for me to accept a losing trade. How can I improve that? Do you think it will come with time? Yeah, I think it will, and I think it comes from your detachment of the P&L. Which not everybody can do. All right, I'll just put this out there. Not everybody can detach from the P&L because of their relationship with money. if you have a bad relationship with money, which I did for a very long time, I had the scarcity mindset and I couldn't detach from the losses. But when you journal, don't focus on the P&L. The P&L has very little to do with how I'm performing. Right? Because what does your journal look like if you have a green P&L, but you broke 10 rules in your system? Yeah, it may feel good from like a outcome perspective. Like, yes, you made money, but how does that look long term? How does it look long term? If you consistently break rules every single day, it doesn't look good. I'm telling you guys. I mean, maybe that's why you're struggling right now. It's because you're not focused on a process that works and having a journal that makes sense. The journal should be based on, did I follow my rules today? Or did I follow my rules this week? And I'm not going to come on stream and trade just for the sake of trading in front of you guys when it wasn't in my plan at the beginning of the week to trade on NFP. Right? Because I know it falls on the first day of the month. I know we have Fed funds rate out today, or sorry, Wednesday. And this calendar just is too much risk. I've lost too much money trying to trade in conditions like this. Plain and simple. And even though I told you guys I was very cautious about going long, I can't be the first one into the trade because NFP came out and it just prints lower. It doesn't even create a higher wick. We don't even get a market structure shift. Guys, I'm telling you, I've been telling you what my bias the entire stream. I'm bearish on the dollar, maybe for years to come. This quarterly chart really hasn't gone anywhere, right? Zoom out. If we're looking at what I'm looking at, we have a buy side liquidity raid. We have a monthly bearish breaker that we traded to just now. So the daily bias is really my quarterly bias. I'm going to be bearish for a very long time until the market tells me that I'm not bearish. All right, does that make sense? The euro, the quarterly chart is bullish, so I'm bullish. It doesn't matter if the daily is going lower to me. I don't care about that. I just talked about what I'm looking for next week. If we get a nice inverted fair value gap here, I'm going to position myself long to run on this liquidity. And I don't know how long it's going to take to get there. It might take days to get there, but at least I know I'm positioning myself properly to take advantage of that run higher. What I think happened in my head, Soul, that made me profitable after years of losses. It's very personal, to be honest, guys. I lost both my parents to cancer. And at that point, I was so sick and tired of my job that I just said, screw it. I'm going to go all in with trading, and I don't care about the money. Because trading, again, it's your relationship with money. And right now, money, when the shift that happened to me was that I started valuing my time over money. Because right around the same time I lost my father, I started working harder, and it was draining. Like, I didn't get enough time to spend with my wife. That was like a major thing, is that we have very limited time on this earth. Okay. And the money, while it helps, trading is a way for you to make a living on your own terms. But you can't do that if you are focused on the money. I know it sounds crazy, right? But it's a realization that at some point you're going to have. The time that you get back to spend with family, with friends, and doing whatever the hell you want. Like right now, I could go log off and do whatever I want. I could go to the casino. I could go to the beach. I could do whatever I want. I could go take a flight to Japan if I wanted to. Right? With a job, I was very limited with that. Limited PTO. I was working 60, 70 hours a week. And it's that shift where your relationship with money is more so like you don't need it. Okay. time is way more important than money. So the vehicle that gets your time back is trading. And the only way that you're going to be able to do that is by focusing on a process, right? Process based. Yeah, I started doing things correctly. What I stopped doing was micromanaging my trades based on what the P&L is doing. That is the biggest thing, absolutely biggest thing. And then not only that, not over trading and not over leveraging. Those are the killers. They're killers. Because how many of you guys, and I asked this to my community yesterday, how many of you guys are comfortable? Type in the chat how much risk you're taking right now and if you're comfortable with that risk. How much are you guys risking right now per trade? So why am I still here? Because I'm passionate about it and because I'm turning people into profitable traders just based on sharing my time. If I don't leave an impact on this earth before I leave it, my life is pointless. I don't want to just go to the beach and do whatever, right? I'm talking about dollar amount, guys. Dollar amount. What are you comfortable risking, dollar amount wise? $100, $1K. $2,000, $50, $500. You guys can see that everybody has different risk tolerance. And I didn't build up heavy risk tolerance for a very long time. I started out just like you guys, $50, $100. And how many of you guys are nervous when the trade starts going against you? Right? You can't hold the trade because you see your P&L down $100 when you wanted to risk $200. Right now you're down half of what you wanted to lose. And then all of a sudden you close the trade, and then as soon as you close it, it starts going in your direction again. Or if you're up profit and you're only up 1R, you close the trade because you want to lock in profits. And the point of me asking you guys that is that those dollar amounts is just a unit of risk. It doesn't matter if you're trading $100. It doesn't matter if you're trading $500. It doesn't matter if you're trading $1,000. It doesn't matter if you're trading $2,000. And it doesn't matter if you're trading $10,000 risk per trade. It's the same trade. It's just how you manage those emotions, because you can't go from being uncomfortable risking $100 and expecting to be comfortable risking $1,000 and size up like that. Because if you're uncomfortable managing $100, you're going to be uncomfortable managing $500, and you slowly build up that risk tolerance. And maybe you guys are never going to get to the level that I'm at. You're on your own journey. And something that helped me that I've talked about was my career in construction. So I used to manage $20 to $25 million home projects, and I would have 2 to 3 of them on my desk. I was in charge of those budgets, and these clients were spending $1 million on doorknobs, right? Just think about this. $1 million on doorknobs. So if I get 2 different bids from 2 different vendors, maybe that swing between one vendor is $100,000. But as far as total budget size, if it's $100K, do you think that client that is spending $25 million on their house really cares about the $100K? No, it's less than 1%. It's 0.5% of their project budget. But it goes the same. It's an economy of scale. So take that $25 million home and compare it to a home that you're spending $500,000 on. If somebody's allocating 0.5% to their doorknobs, do they really care about the difference between $5,000 on the doorknobs or $4,500? Right? It's just at a different level. So when I got comfortable managing money, it was totally different, because I saw people spending hundreds of thousands of dollars on things that you would not expect people to spend hundreds of thousands of dollars on. Okay, and it was just being comfortable with those large numbers every single day. But you build up to that. You slowly build up to that. Dude, what happened to gold? Shit went way up. I talked about it. If you guys missed the beginning part of the stream, I did talk about that we were stuck in a range, and we're at range lows right now. So again, if you were trying to position yourself short, you need to ask yourself, where am I going short? You're going short at the bottom of this, right? You're chasing that move lower, which to me is not proper risk to reward. So again, the risk thing, it takes time to get used to. That's how you get comfortable with losses, is by realizing that you have an overall bankroll, okay? And let's say if you're giving yourself 20 trades before you blow your account, it shouldn't matter if you take 2 or 3 losses. It should not matter. Because if your risk to reward is good, you're going to make back those losses very quickly. I mean, that's totally fine, Jermaine. You said you were long last night, but listen, NFP, if you're positioned ahead of it, is a gamble. Plain and simple. So don't look at the outcome of the trade and say, oh, I missed the trade. Did you follow a trade plan? Everybody's so focused on, it's very hard to detach from that. To detach from the idea that you did the right thing, even though you missed out on money. But that's why you're focused on P&L. Guys, I'm answering all the questions that I can, but a lot of you guys are asking the same things over and over. And a lot of these questions, guys, will come from you putting in the work and you actually thinking independently, because that's what this game is all about. If you can't think independently, you're going to have a very hard time doing this. Very, very hard time. Because I don't think anybody ever made it long-term with a silver spoon in their mouth. Because what happens if I come on here and trade live in front of you guys 5 days a week, and then I somehow end up in a car crash, and now all of a sudden I can't stream for you guys. Now all of a sudden you're lost, and you didn't learn anything. Crazy large SMTs. Yeah. If you see large SMTs, you're just trying to find the asset that makes the most sense, that has the most strength. In my opinion, ES looks probably the strongest out of these. YM looks the weakest. How can I shorten the time it takes to master my psychology? Honestly, probably meditation. And I talk about, every trader talks about this, but how many traders actually dedicate themselves to a cycle of meditation? How many of you guys can sit still in your own thoughts for more than 10 seconds? And, don't feel bad if you can't, because society right now and everything going on with, short form content, all that stuff, it's meant to draw your attention for 30 seconds, right? But you're scrolling because you can't sit still and watch something. It's just your attention span has been diminished, right? And when you can sit still for like 10, 15 minutes, that is when you're going to notice, like, you have these emotions that pop up and you just become aware of them. So mastering your psychology is just about knowing yourself and knowing your emotional triggers. Like, do you guys see these markets right now and feel FOMO and you want to jump into the market right now? Some of you guys go on autopilot and then take a trade that wasn't in your plan. You need to have a plan and you need to follow the plan, right? That's all trading is. That is all trading is. Well, first of all, you need an edge. But I think, and I talked about this with Paulina the other day on the Psychology Talk, I think most traders have enough in their knowledge base to have an edge in the markets. But they either can't control their emotions, they're looking for something new all the time, and they can't follow what they say that they're going to do. Even if you followed every rule in the book and took a loss, that is still a good day. And if I were to review your journal and I saw you did everything right, you took the setup, you did the execution right, you planned it out ahead of time, you managed your emotions, and you still took a loss, I'm still going to give you an A+. Because you did everything that you're supposed to do. And long term, that compounds. Right? So having that edge, even if you're going through a cold streak, at some point it's going to turn around and you're going to see the equity curve go higher because you're following a strategy and a process that creates profitability. But I think a lot of people watching this, unless you're like completely new to trading, I think a lot of people that are like a year or 2 years in have something that works. It's just you abandon it, you abandon the process, you abandon your rules, and you're looking for something that is going to provide that 100% hit rate, which is not there, guys. It's not there. You think nobody has the answers? The answer really is you, honestly. Because the strategy out there, and to be honest, a lot of the profitable traders I know, even if they're not trading ICT, trade a very similar strategy. But the biggest edge to me is the person that's using the strategy. Because again, I can't transfer my experience and my emotional control to you guys. No, doesn't matter what kind of course you take, doesn't matter how many videos you watch, you cannot transfer the emotional control that some other people build. I'm just saying, I'm going through all your videos, but what model would be the easiest? Honestly, all the models are very similar. Liquidity raids, fair value gaps. That's it. Liquidity raids and fair value gaps and a draw on liquidity. You don't need anything else other than that. But it's about the context of the market. Right? Because somebody had mentioned we're trading into a daily sell side imbalance. That's not enough for me to go short because it's in a discount after taking out a low. Right? And I told you guys I'm looking for this level to invert, and it's just the context of this sell side imbalance is not there. Right? If this sell side imbalance appeared up here and we haven't run out liquidity and we were trading up here during NFP, then the context of it would be bearish. And let's say we didn't run out the low yet. Right? Just pretend that we didn't run out the low. Let's just say that this is where we were during NFP. And then this is where the bearish fair value gap shows up. And we still have this sell side liquidity and this sell side liquidity. The context of it is that this market could still go lower. Right? But the context of this bearish fair value gap that appears down here is too late. It's not there. So again, with fair value gaps and every setup out there, if you have the right context around the markets, you're going to do much better. You're going to avoid bad trades, right? And that's the filtering part of it. You have to be able to filter out what you're going to trade and what you're not going to trade. But just like I mentioned earlier, amateur traders don't know how to do that, which takes time because they're trading everything. They're trading every single day. They're trading every single setup that appears, and they're not journaling any of it. And I'm saying this because that was me, right? So I'm only going to stay on here, guys, for another 5 minutes. Michael's asking, what was my aha moment in trading? To be honest, guys, I don't think you ever get it. I think there's certain points along the trading journey that adds to it, but there's never like a sharp turn where it's like you go from unprofitable to profitable overnight. It's not like that. You make slow incremental progress towards that. And then the aha moment was that you were learning this whole time. If you followed the right plan, that's the aha moment. The aha moment is like all those years that I put in, right? All the backtesting sessions, all the journaling, all the days that I'm going through drawdown. That's your aha moment. And you're like, the journey is the destination. Okay. NLZ trades saying on Kick, I've taken your advice on focusing more on high time frame for Forex, however, and seeing success the past year. However, I want to transition to indices and trade low time frame. Take the same model, but do it on the low time frame. Just know that your frequency is going to go up. Okay, so your risk management has to be on point. Because what you guys are going to notice is that those low time frame setups look just like the high time frame setups. They look exactly the same. This liquidity right here, even though it's taking place on a daily time frame, if I were to go to a 15-minute time frame, it looks very similar, right? You're looking for a closure back above the low. It's just happening faster. And that's where traders trip up, is because they can't make those fast decisions quickly. You know, when I look at these markets, if I were to take a long position right now and I get stopped out, you know, what does this daily candle look like? Even if it does run higher, I just know that the daily candle's already expanded and I'm putting myself at risk because I'm chasing it. But if this sell side imbalance inverts, that's exactly what I'm looking for. If we get a inversion here, and then we get a nice bullish daily engulfing candle, then next week it really sets up for a run higher. Because look at the weekly. The weekly is still going to close bearish. And that next weekly candle could rip higher and take out all this liquidity here. And just me sacrificing one day where it's high risk, I don't care. Because I'm in this for the long haul. I guess another aha moment for you guys is that I'm not trying to put timelines on my trades. So even when I'm aiming for a payout on a prop firm account, or if I'm trading a personal account, I'm not telling myself I need to pass this by X day. When it happens, right? I'm very close to passing my my profit goal on funding ticks. And I probably could have passed it today on stream, but I don't care about when I get that payout. The stream runs deep, very informative. Thanks. I mean, from a coaching perspective, this is honestly what I wish somebody told me. But now you guys have the benefit of having all these live stream platforms. You guys get to tune in to a lot of experienced traders. And some people think I'm just a fraud, right? But I think over time, if you go back to these streams and listen to what I have to say, you're going to be like, that guy was right. You know? And that's exactly what I did with a lot of people I used to watch. You know, you're very skeptical about these people. But then if I just go back to and listen to what my first mentors had told me, I already had a profitable strategy. I already had everything that I needed. If I focused on the high time frame, if I did all this advice is all the same stuff that people told me 10 years ago, right? And it's been the same stuff that people have been preaching for 20, 30 years. Nothing has ever changed, really. It's just the human condition. That is why traders fail. Because markets are operating on fear and greed. But if you can operate in that area where you're neither fearful nor greedy, that puts you in the top 10%, right? And then when you refine your systems and you get better at doing these things, that puts you even further ahead. But it's very, very hard to do, to disconnect from your emotions or be aware of your emotions enough that you're not realizing that you're getting triggered. How many of you guys have been to the casino? And after this one question, I'm going to hop off. How many of you guys have been to the casino? And you're sitting next to a guy that is on a cold streak and he's losing all his chips and he keeps throwing money down on the table. You guys can actually feel his emotion, right? Or her emotion. You can tell that they're not making the proper decisions. Because even if you are playing a game that has decent edge, they don't know how to manage the bankroll, they don't know how to manage their emotions, and they make rash decisions. And it's the same thing with trading. If you can learn to operate in that area where you're neither making poor emotional decisions, because we have these emotional triggers that's causing those mistakes, right? Fear and greed. Maybe there's other things, maybe anxiousness or anger. These emotional triggers are getting you to make mistakes in the market. So I think this was a good stream, guys. Even though I didn't take any trades, I hope you guys learned a lot from this, and it's been a pleasure chatting with you all. And obviously, I'm going to be here every Friday. So maybe next Friday, keep note of the stream. Know what I'm looking for next week. As long as we get a closure like this, we get this inverted bullish fair value gap here on the dollar. I'm looking for that retracement next week. And let's just take a look at the calendar. Let's look at next week. Oh, look, we don't really have a lot going on next week. So this should be a very clean week as far as price action. We don't have to worry about too much. Like, these are news releases that I'm not really concerned about. Sometimes I'll even position myself ahead of because I don't really care about them as much. And what I'm looking for is maybe the high of the week being printed on Tuesday, right? Maybe trading up here, position myself short on the dollar, ISM, to maybe take us lower, maybe retracing, taking out, trading back towards this weekly open and maybe lower, right? So that's my buys there. Obviously, with the dollar going lower, I want to see index markets going higher, but maybe there's more room to run and trade into these levels. So one thing I also want to note, which you guys should plot on your charts, is this candle that doesn't have a wick. Okay. Pay attention to this. It overlaps with a fair value gap. We could retrace all the way down here before seeing some type of response. But that's what I'm looking for. If I'm looking for the dollar to go lower, investors chase yield. So they're putting their money into risk assets, okay? Aussie dollar, New Zealand dollar. I think all these markets here have room to run higher. This will be interesting. I don't think, is there SMT between pound? What day is this low? 12th of May. Yeah, there's SMT between euro and the pound. If you look at euro GBP, it should be going higher, right? So if euro GBP is going higher, the euro is going to be the stronger asset. So if you're going to pick a position to trade, probably want to go long in the euro and not in the pound. All right, guys. I hope you guys enjoy the stream again. If you haven't already, subscribe to the channels. Either Tradin TV, Tradin Official on YouTube, and then my Kick channel. And I'll see you guys next Friday. Hope you guys have a great weekend.